Good morning. I'm here with Artjom Jalosa, the CEO of OVE Capital, also known as Mr. Deal by Deal. Artjom, good morning. Nice to have you. Please introduce yourself and your firm.
It's great to being here at the IPEM. My name is Artjom. I'm the CEO of OVE Capital. We are a Swiss-based investment manager, and we are building Europe's largest deal-by-deal platform.
Please explain your business model.
Our business model is quite simple. So what's the vision? It's actually what we are trying to do is we are connecting on one side the institutional and professional investor directly with a private equity or private markets transaction without a blind pool fund structure. Okay. It sounds very simple, but it's kind of innovative in our industry.
What are the benefits for your investors when they do deal by deal?
The benefits for our investor is also quite straightforward, right? You are not investing in a blind pool, so I'm not asking money for something which might or will come, but they actually get a deal, they see a deal, they decide directly on the transaction and can really cherry pick kind of deals that they like. That's the first very important one. The second one, we do actually all the work for them as a fund manager. So we source the deal, we do the due diligence, we work on the value creation, we invest our own money. So very, very similar as a fund manager. And they have access to all the information with regards to the due diligence. And last but not least, it's also cheaper than investing in a fund.
So you apply the same levers that a normal private equity firm would apply when you manage your investments. And second, why is it cheaper? How is your remuneration model different?
Yeah, absolutely. So it's cheaper. We apply the same value creation levers, yes, because I think private equity is not a rocket science anymore, right? So everybody is trying to differentiate because they have the best industry and operating expert, but everybody is literally doing this very similar things, right? And why is our business model cheaper? To give you one very concrete example, in a fund model, you pay on commitments. So you pay for capital that is not working for you. This is not happening with our deal-by-deal approach. So it's also cheaper.
These investors that you invest money for, how are they different than the LPs that go into the normal fund structures?
Yeah. So I would say our investors are the sophisticated in the industry. Why is that? Because if you look like 10 years back, investors starting doing fund investments, then they did a bit of co-investments. And now investors really want to say in what they invest. So they want to shape their portfolios. They really want to decide what they are doing. So I would say this model is really gradually shifting to a very sophisticated investor model. And we have now today very, very much a sophisticated investor, including pension funds, insurance, family offices, and investment professionals themselves actually as well.
Can you disclose what the usual ticket size is for an investment?
Yeah, so the sweet spot is between 15 to 30 million euros. This is the sweet spot that we have because we think this is where we are really in the small cap segment because investors really want alpha returns today. So by investing in the large cap segment, this is not, you are not able to get this.
How do these deals work in terms of, sometimes our clients tell us, yes, fundraising is difficult and the big LPs don't want to look at new firms because they always have due diligence and everything is so complicated.
Yeah.
So how, you're doing lots of smaller deals. How does the due diligence work and what's the timeline? Do you have a 5 to 7 year horizon as well, or?
Yeah, very happy to tell you more. And to your first point, so I totally agree, right? Everybody is telling like fundraising is different. Everybody's telling with the same story. We have the best team, we have the best track record, we have the best operating guys. We are not doing this. We are actually showing people deals. And if they like it, and yes, we have also a great team and a great business model and so on, but this is what we are doing first. In terms of timeline, so our vision is really to have in the future, how do you want to do private markets transaction with institutional investor? And today it takes, I would say, 2 to 3 months to finalize a transaction. We hope we will get there in like 1 or 2 years to shorten it to a couple of weeks' time. But in the future, the vision is really to, if you see a deal and you will be access to invest in a deal by one-click solution. So this is kind of the vision that we have for our business model.
So you think that's kind of going to be the future, the long-term future of the private equity industry?
Yes, I think so, because the idea is, so let's take like the kids of today, how will they invest in the private markets today? So they are used to iPhones, apps. So I really don't think they will study like 300, 500 LPA documents, but they want to see digital solution and an easy way to access a great transaction.
Thank you very much.